In the commercial real estate business, there's always something that we need to know in order to be successful at this career. So welcome to our What You Should Know series. Today we're going to talk about adjusted cost basis. What does that mean and why is it so important? Well, the adjusted cost basis is what you pay for a property and then the cost of all of the improvements that are made on that property. This increases your cost basis. That's important because when you go to refinance a property, oftentimes lenders are going to want to know what your cost basis in that project is. And certainly when you go to trade that asset, maybe for something of higher value, again, that's where cost basis comes in and it's so important. So how do you calculate the cost basis? Well, again, as I mentioned, is what you paid for the property. So let's assume that you bought a property and it cost $1 million. And then to close on that property, maybe you spent another $100,000 in various fees and costs associated with the acquisition of the property. And then once you own the property, you want to make improvements to the property. Well, maybe that's another $400,000 of improvements that you're making to the property. So now you bought the property for $1 million. It cost you $100,000 in closing costs, and then you added another $400,000 in improvements. So what's your cost basis in this property? Well, simple calculation will tell us your cost basis is $1.5 million. Adjusted cost basis is what you should know.